So I had drawn this. We were trading this SOLY. No, we weren't trading. We were following it. And earlier today, and it had this breakout of this wedge pattern here, and it popped and traded up to 2175, and then consolidated and really got into this a wedge pattern. And so what I've drawn is I've drawn the lines where it touches the bottom, and then I drew a line where it touches the top. Now this is a very typical coiling pattern that you see. It especially happens after stock runs up big and then midday it just coils sideways like this. Now it's a bit earlier than I would have expected it to pop out of here, because normally you would see it pop out at the apex of the coil here, but interestingly enough, just as I was talking about this trade, let's see if it's going to pop to the upside within 30 seconds, the stock jumped at a dollar, close to a dollar, in less than a minute. And now this is going to come up into resistance at 2175, but this is a very good example of trading a wedge pattern and having it break out one way or the other. I mean, you don't know. The thing about this type of pattern is you don't necessarily know which way it's going to go, up or down. Now, not typically, this would be, I would call this a a bull coil, because it is on the upside, and you would expect it to resolve to the upside, but not necessarily. These coils are not predictable in that sense, and the closer they get to the apex, it's very not easy, I wouldn't say, but if it's a thinly traded stock, and if the shorts attack it, they'll knock it down, or if the bulls come in, they'll drive it up. Could go either way. But when it goes, and if you happen to be watching it, what you have to do to take advantage of it, you take the trade. And sure enough, on this one, it jumped a buck in an instant, and it would have been a good trade.